Vancouver home sales just hit a new all-time high price record, while inventory hit a low record. Hey everybody, welcome back to the Vancouver Life Real Estate Podcast and YouTube channel. Today, Ryan and I are going to be going over the November 2021 real estate stats for GVRD. And like we just touched on right off the top, new price record, new inventory record, both in the opposite directions. We'll get into those specifics shortly. First, we like to always kick off with the sales volumes numbers. So in November, we saw about 3,430 homes sell in that month. This is a 12% increase from last November.
Holy cow.
Yeah, big numbers, big gains we're seeing. But do know it was about a 2% drop from October. Somewhat typical, within the cycle. Winter comes, sales start to slow, but again, only about 2% off of the October numbers. The sales volume, not a record, but it is the highest amount of sales in November that we've seen for 6 years, dating back to 2015. And also, we're sitting at about 34% above the 10-year average for sales. So a sustained amount of high volume here. Yeah.
What's interesting about that is it's funny because total sales, not a record, but the highest in 6 years. Well, if you go back 6 years, we actually peaked in inventory. So it's probably a direct correlation of that.
Very interesting.
Yeah, we probably have more sales if we had more product.
I think unquestionably, it's every market flows independently almost of the year before. But yeah, of course, should people have more to buy from? We know from our group here that its inventory is the issue, meaning that we have far more buyers than we have homes that they like. It's not even affordability for a lot of these people, it's availability.
It's so true. It's so true. It's been affordability for so long. It just seems interesting and almost comical that it's going to availability now.
Yeah. When we're talking about these elevated sales numbers, the amount of homes sold last month in November is higher than any month from the range of mid 2017 all the way up to mid 2020. There was a 3-year range there that no month, not even peak months, sold as many homes as we saw happen just last month. On our last podcast, just last week, we announced that Canada, year to date, has had a record number of sales happen for any year ever. British Columbia on pace to probably have a very similar stat going to come out at the end of December here. So we're gonna be right at or just above setting a new all-time record for sales volumes for the province for 2021.
Wow. Okay. Well, let's look at the supply side because inventory, it probably won't be a surprise. Anyhow, there were 3,964 detached, attached, and apartment properties that were newly listed on the MLS in November in 2021. This is actually a 2.6% decrease compared to November of last year, likely due in part to our consumption rates here, and a 2.1% decrease compared to October when 4,049 homes were listed. Again, that's probably a seasonal adjustment, as Dan brought up earlier, right? And then, Dan, maybe let's touch on the inventory here because this is kind of scary.
It's getting to critical levels now. Like Ryan just touched on, we're seeing a decrease in new listings, yet a massive jump in sales. So what's that going to do to inventory? It is going to drive it further down. In GVRD now, we're sitting on about 7,140 active listings. This is down 36% from last year and an 11.1% decrease from just last month.
Yeah.
And if you remember what we just talked about last month in October, it was a 13% drop then. So we saw a 13% drop followed by an 11% drop. This is the 6th consecutive month of inventory declines. That's actually
a lot.
It is.
It's a lot of declines.
It's somewhat typical of the cycle, meaning that inventory for any given year will peak in and around summer, and then decline through the winter seasons. But the difference this year is that we're coming off of this much lower baseline. This is sort of the third or second year in a row where we're seeing just a real decline in overall average active listings throughout the entire cycle. So we're sitting on approximately 2.2 months of inventory. What does that mean? That means if no new listings came online moving forward, that all existing homes would be sold in 2.2 months. When we talk about how many homes, how many listings would it take to get into even a balanced market, we would need to more than double the listings we have active today tomorrow to be in a balanced market.
Which we don't see happening. We
Yeah.
don't see that happening. I mean, the buyer demand alone right now. I mean, November, like we're talking about, this is the hottest November in 6 years. I suspect that sellers are also looking at this going, great, like I could list and sell my place like that. Where am I going to go? And if there's nothing to buy, there's going to be nothing to sell, right? People are going to hold on to their properties, and this kind of creates a bit of the issue. We need to bring on some more supply here so that we can help bring some balance back to the market. But I just don't see that happening for some serious amount of time here.
Yeah, I agree, and I think the way it's heading to. I mean, listen to this. So when we are talking records, yeah, for the data that we have dating back to around early 2000, this is the lowest November inventory on record. There are only 4 months on all record where there are lower inventories, and every single one of those 4 are for the month of December, because naturally Decembers drop off a lot. Here's what's wild too. If you look at all those Decembers that were the only numbers lower than we are today, their Novembers, meaning their month before, where we are today, all of them averaged over 2,000 more listings than we have today.
Holy cow.
So where are we going to go with this? Well, the lowest December on record was in 2015 with about 6,800 listings. We're only 300 above that. So there's a very good chance we're going to be at an all-time low for inventory in about a week.
Wow.
So this will be the lowest December ever recorded coming up. So
wow.
yeah, I know.
It's not getting better. It's getting worse.
It is. It's just trending that way, and it has been for about 2 years now.
Wow.
Overall numbers. And gosh, that's GVRD, and there's some very interesting stories that we're seeing over on the island too. Like Vancouver Island has hit some critical areas. We just talked about GVRD having about 2.2 months of inventory. Nanaimo is down to 3 weeks.
Holy
We're measuring
cow.
it in weeks on the island right now. And some of the smaller areas like Parksville, they're even tighter. So you can imagine somewhere like Nanaimo with only 3 weeks of inventory, what are prices going to do? Everybody is clamoring. Everyone's fighting to get the last bit of scraps of real estate that's available. Mm-hmm. And so in that area, we've seen detached homes up 36% in the last 12 months.
Holy moly.
Condos, 50%. And bare land is up 86% in the last year in Nanaimo. I mean, Nanaimo is interestingly an area that we've been recommending to investors for about 3 years now. And so the clients that are there now, I mean, we're talking to these guys often, and the stories that we're hearing about, well, yes, they're happy with their current assessments and their prices, but the rental market too is so tight that people are lining up around the block to get into anything. Rentals, buyers, it's just extreme there. It's literally critical. Like it's not a healthy environment.
It's interesting because I think we reported last week when we talked, or maybe it was 2 weeks ago when we talked about Toronto. And Toronto had hit an all-time low of inventory of 3 weeks as well. Now I know this is obviously, you can't compare Nanaimo to Toronto, but the trends are similar. And what's interesting is typically what happens in Toronto happens first, and then we start to feel it out here in the West. And 2 weeks ago, we heard, Toronto was down to 3 weeks of inventory. And now we're starting to see spots of that come up with declining inventory numbers happening and trends going downward in British Columbia. So especially the GVRD here. So again, it's interesting, but we'll get into it a little bit later, but, we're seeing real estate companies, large ones like Remax and other big brands coming out saying that, they're still going to see prices rise next year by a significant margin as well. Anyhow, we'll get into that in a little bit, but let's talk about the sales to active ratio. I love talking about the behavior in the marketplace. So for all property types, the sales to active listings ratio for November 2021 is in a massive seller's market at 48%. Again, a reminder, 12 to 20% for a sustained period of 3 months will capture a balanced market. So we are way out of whack with that. By property type, so if we look at specifically detached homes, they are well into a seller's market as well at nearly 34%. Townhomes are at a whopping 74.3%. That's an insane number. And apartments have shot through the roof at just about 54%. We've talked about it for a year now. I mean, the demand here, coupled with our supply issues, and very cheap mortgages. Here you go, buyer behavior, right? And it hasn't slowed, right? This kind of tells me that even though prices have risen to nearly all-time highs, we're in and around those numbers again, people still feel there's room to move in the marketplace, or we wouldn't be in such a seller's market, right? So, and it's reflective of our demand, it's reflective of immigration, it's reflective of a lot of things. So, yeah, we're certainly going into the end of the year at a full sprint when it comes to a seller's market here.
Yeah, it was just 41% last month and now 48. So it's actually gaining steam here. And again, we've been seeing this trend upwards since about January of 2019. We're the second highest it's ever been outside of March of this year, dating back to 2017. So again, to see us sort of this late in the game and seeing, we're 5 months of it trending upwards, and that's only because it's coming off of that insane March high of 58%. But the fact that it is, again, it's picking up speed. The rate of acceleration in the last 2 months is the fastest it's been since our crazy February, March.
And it's funny because I think, historically, if I've had buyers who were kind of struggling during the main buying seasons or selling seasons, I often tell them, hey, look, well, let's hold on and go into the quieter months, and we'll likely be able to compete less and pick up on some units that are otherwise getting slept on. Not the case with this November. Not the case at all. I mean, our real estate group did, just over 9 million in sales in the month of November, which was not what we had planned. And I think a lot of realtors felt that across the marketplace too. So it doesn't really surprise me, but yeah, let's get into the numbers for price, Dan, because that's why everyone's here.
Okay, price. And here is that record we just talked about. So the benchmark home price for Vancouver, new all-time high of $1,211,000. We've just cracked the 1.2 mark for the first time ever this month. It's up about $12,000 from last month. Where we were just under that at 1.199. So there you have it. This is a 16% increase from where it was last year, and a full 1% higher than it was just last month. So again, the rate of price appreciation is still incredibly, incredibly strong. Even this late in the game, even at these record high prices, we're still seeing upward pressure, especially with that sales to active listings ratio that Ryan just went over. It's impossible for prices not to go up in that environment. That's the HPI. We always look at the other two metrics. So median price, interestingly, exactly the same as where it was last month at $899,000. And lastly, we will look at the average price, which is also at a brand new all-time high, sitting at $1,239,000. That's up $13,000 from last month. So we've got two metrics, the HPI and the average, at all-time highs, and we've got median holding strong at $899.
I don't really know what to say. to be getting all-time highs at this time of the year, it just makes me feel like we're outside of what would, I mean, I know we're in a pandemic and all of those things, but the pandemic isn't new to us now. We're almost 2 years through this thing, and we should have some degree of predictability here, but this is so not like your average real estate cycle, to be seeing all-time price highs in November, which is typically a declining market. Um, it's it's just it's a crazy time. And I do think that if prices continue to go, especially in real estate, you will start to see the Bank of Canada come out. They're going to start talking about rates probably a little earlier than we had anticipated. I'm starting to see articles coming out on Reuters and all over the place where they're thinking about rate hikes. So anyhow, incredible numbers though. So let's break it down by asset class. Let's start looking at the single family homes, the actual apartments, and the townhouses. So sales for detached homes in November 2021 reached 987. This is for single family detached. That's a 7% decrease from November last year. Again, largely due in part, I think, to inventory consumption, because the benchmark price for a detached home is a whopping 1.87 million. This represents just about a 21% increase since last November, and a 1.1% increase since October of last month. That means if you lived in your home, Dan, and you live in an average detached home in Vancouver, it went up nearly 20 grand last month. That's
better
incredible.
than trying to save to buy that same home.
Yeah. Apartments. So apartments, sales of apartments reached 1,828 in November. That is a 33.3% increase compared to November last year, which seemed docile at 1,370. The benchmark price of an apartment is now 752,000, and this is a 11.4% increase from November, and almost a full 1% increase compared to last month. Your townhouses and your duplexes. So attached home sales in November totaled 613. This is a 3% decrease compared to the 632 sales in November of last year. Again, though, the benchmark price is up big time here at $990,000. This represents a 20.2% increase from November of last year, and a whopping 1.6% month over month. That you can see that price push, because when we talked about the sales to active ratio for townhomes, it's 74.3%. I mean, it's just about every single townhouse we're going after here is subject free, bully offer, fist fight, here my children, take your townhouse. It's like that right now for townhomes. And I'll touch on an anecdotal story after Dan hits some more interesting data here.
Yeah, just a quick addition here to those numbers, Ryan. Every single price metric for all three asset classes, so HPI, median, and average, all of them are all-time highs. Other than there's one minor exception, apartment average price is just a hair under its all-time record. But the median price for all asset classes is currently all-time high. The HPI for all three asset classes, all-time high. And the average price is all-time high for detached and townhouse.
I don't know. I don't remember when I last heard that, or if I've ever heard that.
Yeah, it just kind of hit me to look that up, and there it is.
Wow, yeah. That's incredible. So, I mean, okay, so I know we talked about wanting to touch on an anecdotal story here. So I have a client of mine who, I guess they're a family, and he suffers from a disability, and they went after looking for a townhome here for the last sort of 2-3 months here in Langley. Very, very hard to find. I think about a month ago, I talked about how we were out with these guys and we got destroyed in multiple offers with townhomes going $100,000 over the list price. And at that time, it seemed like, you could get a 2008 townhome in Murrayville for $795,000 kind of price point, right? And lo and behold, this was a 2008. About 2 months later, same marketplace, we found one that came on the market. Uh, that very same day we saw it, we bully offered. And in that bully offer, there were 3 other people that saw it that day. All 3 of them made offers. Everyone bullied. So it just turned into a multiple offer on the first day it was on the market. Um, anyhow, all of them subject free. The home sold for $858,000, but the difference between this month and 2 months ago is the home that we just got is 32 years old compared to the one 2 months earlier, which was 12, right? So we're talking a $60,000 swing in 2 months for a home that's got 20-year gap on it. Anyhow, that's a function of inventory, but here's the real kicker and the beauty inside of it, because even though everyone's clamoring for price and whatnot, we actually weren't the highest bid, which is crazy. And a bit of a pro tip for you realtors listening out there, make sure you tell your story in multiple offers. My client was suffering from a serious disability where eventually he's going to go blind. Being in this particular development was important because he was 5 minutes away from family who could help with his little daughter. So as much as we, clamor on sellers for, wanting the highest price, they actually didn't take the highest price. They took ours, which was still a very competitive offer by all means, but still, it was heartwarming to see that in an environment which is typically so driven by data and numbers. So I just wanted to share that story.
A great story, and one of the, I'd say, 10 or 11 strategic moves that we make every time we do a multiple offer, because it takes all 10 right now to win in most cases, and human connection is an undeniable one.
Yeah.
So I mean, with stories like that, it's no wonder that days on market average is still very tight. It's actually been the same for 3 months now. It's pinned to the bottom at 11 days on market is how long you can expect to sell your home if you're working with a strong agent. 11 days.
Wow.
And here's one that we are going to add. We haven't added this metric before, but it's one I pulled up and thought it was very interesting. Again, another record, all-time high. The average per foot price of a home. And yes, this is all encompassing. This includes all 3 property types. We are sitting in GVRD at an average of $835 a foot average. 1 year ago, that was $703.
Whoa.
So we are looking at a 19% increase in per foot. Now, if you just remember, we just said HPI price is up 16, but the per foot is going up at a faster pace than the price. So what does that tell us? Generally, the people are moving into smaller properties.
Interesting.
Yeah, so that's a new metric that I think we'll probably keep.
I think that makes sense
every month,
especially as single family becomes far more expensive. People are going to move to smaller properties, and that dollar per square foot ratio is going to increase.
Yeah,
So,
apples to apples. If you're in a 3-bedroom compared to a 2-bedroom in the same building, the smaller the square footage, the higher the per foot price.
Yeah.
So that's what I mean by people are moving into smaller places. If you're living in a detached and it's 500 a foot, moving into a condo that's 1,000 a foot, you understand why this number is getting pushed up. It's part of the reason.
And one of the other things that I'll add, because these numbers are all very interesting, 19, if you, depending on price, which price metric you're looking at, you're somewhere between 19 and call it 24% year over year in terms of asset growth. And what's also interesting is when the pandemic happened, and we've talked about it before in other podcasts, money printing is up by roughly the same amount, right? So 20 to 30%. Is that a direct correlation? In my mind, it is. So just pay attention, because your inflation at 4.7% is, again, on consumer goods, not on assets, right? And assets are what make you wealthy. So pay attention to what's going on with these numbers. It's very, very important. It will not directly relate to some of the articles that you will read about inflation in the marketplace. So do note that if you want to take advantage of this market, you have to be in an asset. Your cash is still trash.
Yeah, another episode that we just had. In an inflationary environment, holding cash is guaranteeing that value is diminishing. And the exact opposite is happening in places like real estate, cryptocurrencies, and other assets. Okay, so let's get back into a couple more numbers here. Percent of list price. So homes that are selling, they're listed for X and they are selling for Y. That Y is 100.9% of the list price, meaning that, yes, of course, homes are selling on average for more than they are listed for. No surprise for anyone who's probably tried to offer in the last few months here. Sometimes we're seeing still obscene 100, 200, 300K over ask prices. But on average, and this is for all properties, 100.9% is the sale price compared to the list price. This is up from last month, which was 100.4%. And a quick note that in all of 2021, 8 of the 11 months have had a sale price over the list price on average.
Totally. That to me screams seller market. And I want to just read into those numbers just a little bit because I think we should take them with a grain of salt. There is a strategy, well employed by a lot of selling realtors to list it on the lower end to create more pandemonium around that particular property or to get more offers on that particular property. It's a strategy we see all the time. And I think when you're in a seller's market, you're going to see more and more of these numbers simply because, well, is it price rising? We know that price is rising. So that's one part of it. But the other part of it is strategically listing low to generate a buzz or whatever it is you want to generate around your listing. So with, if anything, I would look at behavior more than anything like that with those numbers.
Interesting side note here too, just because I'm pulling up the charts here in real time. The percentage of original price, the chart is almost identical to the sales to active listings ratio.
Yeah, it's behavior.
That is
Yeah,
interesting.
there you go.
Okay.
Behavior, yeah.
Moving along. So that's largely it for the stats this week. That's the data. Ryan touched on that story, of course, about the townhome. Very, very, very important lesson there. And also what we think is gonna happen moving forward. One of the first things is, I mean, Ryan, when's the last time you advised a client to list in December? I mean, this is one of the extreme environments where,
Yeah.
if you're thinking about selling your home, you're like, between now and spring, no question, you could be surprised by the level of activity you're going to see on a good listing, properly priced in today's market. It is still feverish out there.
Yeah, I completely agree. I mean, I do think in maybe the week or like 10 days leading up to Christmas kind of holiday, you might see things taper. But this month, I think, is going to be, it fits into the trend of the rest of the last year, right? So why would this month be any different? Short of people, getting together for a couple weeks in it, right? I think that might be the only hiccup we'll see in terms of numbers, because I think once the new year hits back, the same problems are still here. The same problems will persist, right? So I don't see that changing. And the behavior from our current buyers, that we're working with right now, it's like, if we don't buy before Christmas, let's keep going in January, right? We're not taking our foot off the gas by any means here. So
yeah, there was 142 homes that just sold yesterday on December 1st, and it's just the momentum is still there.
Yeah.
So for those that were considering it, it's worth a discussion right now.
Yeah. And another interesting thing, nationally, Remax has come out and they're predicting for the 2022 fiscal year that real estate prices will rise on average by about 9%. That's a lot better than the 20+% we've seen this year. But again, I think a lot of people thought maybe this year was going to be huge and then it might correct a little bit, before getting back on that sustained growth pattern. But, with financial analysts and economists coming out and predicting that there's still going to be growth next year, all the more reason why people are going to want to get in December and January, as opposed to, in the springtime, when you'll be paying another 1 or 2% more than you otherwise would have. Right. And 1 or 2%, 20 grand, like we talked about. Right. So we're talking $20,000 or $40,000 more just by waiting a month or two. So, something to consider, something to really think about if you're in the buying side of things, and if you're in the selling side of things. There's really, as per the sales to active ratio, there's really not a bad time to sell right now, right? So there's way more buyers than there are available inventory. Recently, throughout the month, we've seen Reuters has come out and said, speaking with the chief Canadian strategist at TD Securities, based on what they're hearing from the Bank of Canada, money markets are now seeing the possible first rate hike coming in March compared to April, which is when the Bank of Canada felt it was going to come out. However, depending on the supply chain, there's big hiccups in that supply chain, right? So if that supply chain continues to get hiccuped, it's very possible that the interest rates will continue to stay low as the inflation continues to be transitory. So we'll see what happens. Depending on the articles you're reading, I'm seeing anywhere from 1 or 2 all the way up to 5 rate hikes. How much per rate hike, I don't know. But again, time will tell. But do know that 2022 is going to be a far different year than 2021, right?
Absolutely. Totally agree. I think at the end of this month, we are going to do something fun. I think we'll analyze our 2021 predictions video and see where we hit it right and where we likely hit it very wrong. And then, of course, we'll start working on what we predict here internally for what to expect in 2022. So thank you all so much for watching and listening. Please subscribe if you are enjoying it, getting some value out of this, and we will see you again next week. Thanks.